in your money at a time when FDs are giving you only 4.5% of risk-free return or tax-paid return. Let's invite our market master on that note. Dhiraj Sachdev, the Senior Vice President and Fund Manager at HSBC Global Asset Management, is joining us. Dhiraj, good morning. Thank you very much for joining us after a fairly long gap, I must say, Dhiraj. How does it look, the situation now? Is this a time when mutual funds should be buying, bargain basement levels?
Good morning, Lata. Well, clearly there is a demand disruption happening across many segments as a result of demonetization. And the impact in the corporate earnings side, on the corporate earnings, will be felt significantly over the next 1 or 2 quarters, especially on the consumption, be it discretionary or high-ticket items like real estate or jewelry. But also some of the businesses which have very high fixed cost component to contribution margin will have negative operating leverage impact. So the earnings impact will be more pronounced there. But we all have to understand the fact that the impact or the pain is only temporary in nature and will not have lasting impression given the country's potential. So to our mind, the market will shrug off this demonetization event as one-off in nature and look beyond, especially on the normalized FY18 earnings as such. Also, if you actually look at the discounted cash flow valuations of many businesses, that may not be materially getting impacted. So it is unwise to extrapolate the current state of affairs far off into the future. The positives could eventually turn out to be true in the form of unorganized sector getting into the formal mechanism or organized sector gaining further strength. So our sense is that maybe from a price perspective, a lot of damage may be done over the next few weeks before a pre-budget rally on high expectations resumes back, given the fact that government will try to alleviate some of the pains in the form of lower taxes, both for the corporate side or for the individuals, and also higher rural spending to boost consumption. So from an investor's perspective, this current market decline is a temporary window of opportunity to invest. You can't be waiting for opportunity to get obvious and then start investing.
Okay, that point is fair. Dhiraj, hi, good morning and greetings of the season to you. I was just going through some of the key holdings in your mid-cap equity fund, and you have a relatively large exposure to a lot of the rural-oriented companies, whether it's stocks like VST Tillers, United Phosphorus, Cholamandalam Finance. No one can assess what the damage to the rural economy has been because of demonetization so far. So how do you approach this space now?
Sonia, I think as I clearly mentioned, the impact is temporary in nature, and these are very secure long-term structural business models, and I don't think that disruption will happen. The temporary disruption will elongate beyond a point. So for example, take the case for agrochemicals that we own in the fund. I think only 1/3 of the farmers are aware of crop protection usage, and given the food prices, there is greater pressure on the farmers to improve the crop yield. So this is a very sustainable business with very high degree of capital efficiency in place. So we were fairly encouraged that the compounding element can happen in this business as such. Also, for example, the farm mechanization company that you talked about, the farm mechanization is only going to be on the rise given a higher degree of labor cost that is coming in the farm sector. So we own these because of the sustainability of growth over a period of, or a normalized period of time, despite the temporary disruption that we may see.
You also have Dewan Housing in your portfolio. Basically, housing finance companies, not consensus, okay, the majority chatter on the street is that housing, in fact, anything related to real estate will be impacted for slightly longer.
So Lata, in the real estate obviously is seeing slowdown for the last few years as well, and there is obviously a further postponement of demand, and more than housing finance companies, we believe the building materials will see a major disruption on because of the housing curtailment. But as far as housing finance is concerned, I think that business operates in many of the low ticket items as well, low ticket loans as well in tier 2, tier 3 cities, where we believe the demand supply gap is still pretty huge. So from that perspective, I believe that housing finance business will see sustained growth in their lending book and will not see material impact either in the form of NPA or loan curtailment. So an average ticket size of about 25 to 35 lakhs or 40 lakhs is not big enough where the demand curtailment is likely to happen.
Any other sectors that you would be bullish on now, where you think that the price damage has been done and it's a good buying opportunity for the long-term investor?
Sonia, it's not just one. There are many. We mentioned about agrochemicals. We also own specialty chemicals for quite some time because we believe that CRAMS or an outsourcing opportunity will be material and sustainable because of demonstrated chemistry skills by many of the companies and the environment issues happening in China, which results in business shifting to India. We also like gold mortgage finance companies, despite the correction that has happened. We believe the unorganized private money lending business will shift to organized players on the gold mortgage finance company side. The penetration is still pretty low, and these companies have domain expertise and have competitive advantage compared to banks and money lending companies or private money lenders. We also like asset management companies or stockbroking companies because we believe that eventually the financial savings will be higher because of the demonetization compared to investments on the physical asset side like real estate or gold. So I think financial saving companies in the insurance or asset management or stockbroking companies look pretty interesting.
Well, I hope that happens. I hope the reaction to demonetization is not a fear of currency and moving over to physical assets. But that's a philosophical debate. You know, I wanted to ask you about how your team perceives the global Qs as well. Let me just play out to you what Mohammed El Erian told CNBC just a few hours